What's up, gang? It's Zillux and I'm back with another video. Today I'm going to be going over the three main markets for day trading. And just to clarify, when I say day trading, I'm talking about trades that you hold for less than, a day. Anything longer than that would be considered swing trading. So for day trading, you're typically only holding your positions for about a couple minutes to a couple hours. And before I start talking about the markets, I first want to clarify what leverage is, since I'm going to be talking about that quite a bit when I talk about the three markets. And if you already know what leverage is, just skip to this timestamp in the video. So essentially what leverage is you're borrowing buying power from your broker so you can risk more money than you'd normally be able to. And I know that doesn't really make sense, so I'm going to give an example. So let's say you're just on your own, you have no broker or whatever, and you want to invest $50 into a stock. And let's say that stock costs $50. So when you have a broker or you're putting money into a stock and you have no leverage whatsoever, you can see 1-to-1 is how it's described. That means you're able to buy one share for $50. And then let's say when you buy that one stock for $50 and the price goes up by $10, you will have made 10 bucks. And if the price goes down by $10, you will have lost 10 bucks. Now let's say you have a new broker where you have 5-to-1 leverage. So that means you're able to buy that $50 stock, but you can instead buy it 5 times because you have 5 times the leverage. So essentially that means you can buy 5 shares for the same $50, and the broker is putting in the extra 200 because 5 times 50 is 250. So 50 plus 200 is 250. Now in this case, if the price goes up by $10 when you own 5 shares of the company, that means you will have made $50. And same goes for if the price goes down by $10, because you have 5 shares, you will have lost $50, which means your account is now 0. And if your account ever reaches 0 due to leverage, your position is automatically closed, and that's called being liquidated. So essentially, leverage allows you to have the bigger wins, because if you had only 1-to-1 leverage, you could rarely make profit on any given day. But it also means you'll have bigger losses, so there's risk added to it. And I think that's what leads a lot of people to thinking that trading is gambling, an easy way to go bankrupt, because you can technically lose all your money. But once you understand how leverage works and how proper risk management works as well, you'll learn it's really the opposite of gambling. So now that you know what leverage means, let's start talking about the different types of markets that you can day trade with. And the first one I'm going to start off with is the Forex market. And Forex stands for foreign exchange, and this is essentially where you're trading the price of a currency compared to another one. So this is the euro and US dollar Forex pair, which is one of the most popular ones. And some of these that I have marked out on my watch list over here are ones that I used to trade with when I first started, but you can see they're more popular ones like Euro USD. And for the schedule, it's open from Sunday evening to Friday evening, and they both open and close at 5 p.m. So every weekday, essentially, the market's open. So Forex is one of the markets with a higher leverage than normal. Typically, it's around 50-to-1. So basically, this lets you have a really small account balance, but still be able to trade these different pairs. And you can see, for example, the Euro and the USD pair, you're only trading like $1 at a time. You can see the value is like $1.16. So the market's closed right now, but typically when you're buying these, you're going to be buying a lot of these different shares essentially. And this could actually be something good for people that want to start off learning, because it lets you enter with very little money and only risk, $1 or $2 at a time. Where if you compare it to the other markets, you're going to have a lot higher of an account balance if you even want to place a trade. And these Forex pairs can still be pretty heavily influenced by news. And, people that are maybe more interested in global economics versus things like just in America might be a little more interested in trading these Forex pairs, because news is really what moves the market. Like, for example, this wick right here on July 31st, it was actually caused by a news event where Canada, I guess, supported Palestine, and it made it difficult to form a trade agreement. So you can see there's a big spike on here because of that news coming out. But the one main caveat I will say for the Forex pairs is that it's not quite as volatile as the other markets I'm going to mention, which essentially means that your trades will probably take longer to play out because the pairs don't really move a whole lot in a specific day. For example, on a standard day, it's only moving about 1% in either direction. You can see this number right here says how much it's moving. And you'll have occasional days where it's 1% or 1.5%, but that's pretty small compared to how the futures market or the crypto market might move. But that's going to be it for Forex, and now we're going to talk about futures. So I want to preface this by saying futures are specifically what I trade. And this isn't financial advice, but this is what I think is the best to trade, at least for me. And to go over the schedule, the futures markets open 5 days a week, and there's an hour break between 5 p.m. EST and 6 p.m. EST, and then it'll shut down on Friday at 5 and open back up on Sunday at 6 p.m. And essentially the way futures work is it's different from just standard stocks or buying stocks, because rather than owning shares of the actual asset you're buying, you're trading contracts tied to the price of the specific asset. So for example, what I trade are the NASDAQ 100 E-mini futures. So essentially you're trading based on the price of the entirety of the NASDAQ 100. And you can do the same exact thing with the S&P 500 futures. And not only can you trade things like the indexes, you can trade things like crude oil. And crazily enough, you can even trade soybean oils if you really want to. But you can see by the 1 minute chart on the soybean oils, all these different wicks here where there's no movement in price or very little. It's not really worth trading because no one's really trading it. And this is a bit newer, but there's also been the emergence of crypto futures. So you can see there's Bitcoin futures as well as Ethereum futures. So while you're not quite trading the value of crypto and actually owning a piece of crypto, you're rather trading the value of the asset and the contract that you're buying. And because futures are kind of the more popular places to trade on, there exists a lot of prop firms for specifically futures. And you can see specifically here, if you just search futures prop firms, you can see all the different ones here that I have a whole entire video on if you'd like to check that out and kind of learn what they are. And in my opinion, it's the best way to start learning the skill of trading while having very low risk at the same time. But that's everything to do with futures. So let's dive into the next market, which is crypto. So what I've learned about crypto is it's kind of the riskiest market to trade. It's pretty volatile, especially on the less popular kind of coins and everything. And also it's not very regulated like Forex and futures are, because those are part of the specific stock market and futures market and regulated by the US or the entire world. There can be a bit of fraud or whatever going on inside the crypto market. And not only that, but it can also go up, on Bitcoin around 3 to 5% of its value in a day, either up or down. And on the less popular coins, it could even move like 5 or 10% in a single day. Especially if you're not practicing proper risk management, that could be a super easy way to lose all of your money. So you can see on Bitcoin, we went up 6% in just the span of 2 days. And vice versa, you can see we also went down 4% in just 2 days. And we even have massive candles like this on Bitcoin where we went up 10% in just 1 day. Whereas if I go back to the NASDAQ futures, you can see on the daily chart, we're only moving about 2% in a day. We have close to 3% here, nothing crazy like 10% like Bitcoin has. And crypto prop firms do exist, and I don't know a whole lot about them, but I know that prop firms can be kind of shady. And I would definitely do your research if you ever consider trading crypto and starting up a prop firm account with them. But they definitely do exist, and it's definitely a better way to trade than using your own live funds. And going back to leverage, crypto does tend to have a pretty large leverage size as well, because things like Bitcoin, the value is $118,000. You're going to need leverage if you want to even place a trade. And just to show you an example of how leverage kind of works, on the paper trading account on TradingView, you can see that you can manage the amount of leverage you want to allow your paper trading account to have. So if I have a 10-to-1 leverage right here, and I have $100,000, I can place one trade, right? But let's say I only have $5,000. I shouldn't even be able to place a trade because I don't have enough leverage. See, it was rejected. So to even be able to place a trade on Bitcoin, you're going to need a lot of leverage. So if I have 101 leverage and $5,000 and I make a new account, I should be able to place a trade now. Boom, there you go. And you can see it's possible to lose money. If I had my $5,000 account and we came all the way down to this price down here, I would lose my entire account because of leverage. And to talk about the crypto schedule, the one nice part about it is the fact that it's open 24/7. Unlike the futures and the Forex pairs. So maybe, you're busy during the entire weekday and you want to at least experience some trading. You could trade crypto on the weekends. I'm not sure how much it really moves. Let's go ahead and look at the daily chart. So on a Saturday, we didn't move a whole lot. Sunday, we moved a little bit. Saturday, this candle here was pretty small. And then Sunday, Monday, Tuesday, they're all relatively the same. But it does seem like the bigger moves do occur on weekdays still. So that's something to consider. Even though the market's technically open, not many people are probably trading, which means your trades will take longer to play out. And that's going to wrap the video up on the big 3 markets for day trading. But while this isn't financial advice, I would say to choose whichever market you think you'd enjoy trading the most and stick to it, and don't switch to anything else. Being a jack of all trades in this kind of area is not really what you want to be doing. You want to be an expert on one strategy, on one market, preferably on one asset, and learn all the ins and outs of what makes it move, how does it move, why does it move, so you can be the best you possibly can at predicting its movement in the future. And just to preface, in my other videos, if I do ever mention trading, I'll likely be talking about trading the futures, specifically NASDAQ, just because that's what I trade and what I've learned. But I hope you guys learned a thing or two from this video, and it helps you kind of choose where you want to trade in the future if you're brand new. And thank you guys for watching. Make sure you like and subscribe, turn on notifications, check out my other socials, and I'll see y'all in the next one.